Hi everyone, today let's talk about the EU and their new probe into big tech. Do me a quick favor and like and subscribe and watch the video till the end to help out the channel, and let's get started. So this came out pretty early this morning and it was just updated a few minutes ago, and I thought it would be important for you guys to understand that this is happening. So we've already seen some lawsuits come out about Apple, and that sunk their stock about 4.5%. And now we're getting more legal probes from the EU about basically all of the biggest tech companies. So we have Meta and Alphabet included in this. Apple was already there. Apple was under scrutiny. And these probes are focused on anti-steering rules, meaning that these companies are focusing people onto either their products or things that are advertised on their company or within their ecosystem, such as the Apple Store. And you can see that here, the Google Play Store, or self-preferencing in Google search. So they're either preferencing themselves or focusing you within their platform. And this also includes not allowing companies to steer you outside of the Apple Store or the Google Store in order to circumvent their commissions. And if this comes true, this could absolutely affect the bottom lines of these companies pretty substantially. And these companies are basically driving the market right now. So if they stop driving the market to the upside and they start to see some trouble, this is likely going to bring down a lot of the market. You still have Nvidia that's out there running, but if we see most of the Mag 7 start to tank, that's absolutely going to affect markets. And like I said, you can see Apple was already targeted here for almost $2 billion. Not a massive number for Apple, but who knows what this one could be. And there's also the uncertainty of what this probe could result in. Not just a fine, but over the longer term, how are they going to have to change their business to allow app designers into the store, and then they basically circumvent the store. And now Apple's not making any money on those transactions, which I don't really think is fair either. I don't think companies should be able to just completely circumvent the ecosystem that allows them to exist. And if they don't like the Apple or the Google store, they can always make their own store, and then they can charge whatever they want, unless that's unfeasible. And then they have to live by the rules that are provided to them, at least to some degree. I understand maybe these commissions might be a little bit high, and there's been lawsuits about that already from Epic Games. But then the question is, what is the correct commission? What are they allowed to charge? Which I don't think is very free market. But sometimes you do have to break up these duopolies, which is what Apple and Google have. And then you can see the fifth and final investigation here. Meta, in their so-called pay and consent model, they did launch an ad-free subscription model for Facebook and Instagram in Europe. Haven't heard too much about that. Haven't heard anything about it coming to the United States. But the EU is concerned that they're going to accumulate all of this data and not really providing an alternative, although it does seem like you could just not subscribe to the model and then see the ads. But based on what they're saying here, it seems like the terms include the accumulation of data. Taking a look at some of these companies here, looking at Google first on the hourly chart, you can see it is dropping a little bit. 3 red bars in a row here pre-market, slight bounce. And it was basically sideways on the Friday session, so you could have assumed that there was going to be some kind of pullback. But that looked a little bit more substantial than you would have guessed. Down over 0.5% pre-market, momentum selling off, RSI selling off. You can see we're in this volume zone right through a gap here. Your next volume support would be around 148.40 or so. And then you can see there is very little volume on this chart through that next zone. So 148.40, need that to hold if it's going to do it. Otherwise, you're going to be looking all the way down to the 143.82 level. And then we will have round trip this move. This is the move that we saw on the back of their partnership with Apple. So keep this in mind here for Google going into today's session. Then moving over to Meta, similar thesis here on the hourly chart. You can see 3 red bars in a row, right to that 55 EMA at 505.60. Again, volume profile right here needs to hold that 55 EMA. If that does not hold, you can see down in the 496 area, 494 area, right through this zone would be your support. Highly traded zone 494. And then zooming out here to get a little bit better perspective, you can see that same zone important here, 496-ish. And then really you're looking for support down at this highly traded zone from these previous lows on 15 March. That would pull you all the way back down to 484. And if we see those drops across these 3 major players, that is absolutely going to affect the NASDAQ as well as the SPY. And then moving over to Apple here, lastly, you can see the same selling profile. Have a level here at 170.90. This is a super important zone. We talked about this on the Friday and the Sunday videos. Super important here for Apple in this area. Needs to hold. It does look okay on the hourly chart. You can see we're right in that volume profile. A little bit of buying came in here. You can see that on the profile as well. But the thing that I wanted to highlight here on the daily chart, same thing that we talked about in the last several videos, there is almost no volume here through this next zone. So we're right here now, and you need this to hold if it's going to do it. Otherwise, you can expect a pretty rapid move, in my opinion, all the way down into the 150s. 154.45 is my next level of support if this zone breaks. And this is a potential catalyst that I think could push it through that zone. So keep that in mind here for Apple. And if that does happen, you can expect markets are going to be selling off with it. And then moving over to the options, let's take a look at what is available on the options chain. We were only expecting about $1.50 of move. And it seems like we're already getting that here in the pre-market. So the expected move was down to 149, which is only about $1.70 lower from current price. You can see we're right in there already. And we finished at 151.70. So we were looking at about $2.75 of potential move for this week. And we're already getting that here pre-market. So if you're trying to get into Google, might be a better opportunity now that prices have sold off a little bit. And then looking at the 2 weeks, you can see 147.30 or so is what we were expecting. And now you can probably get in the 145s. So again, giving you some opportunity if you're trying to get into Google on the put side. Otherwise, you can see the calls here only up to 155. You can see there's definitely some skew to the downside. So potentially coming through, and might seem like somebody knew something going into the weekend. And then you can see earnings coming up on April 23rd. So be aware of that if you're trying to get into Google. Moving over to Meta, similar thesis. It's already selling off a lot. You can see 509.50. We're down into the 505s. So selling off a lot after hours. IV rank 66. So there was a lot of volatility already. And I'm sure this is going to add to it. Expected move was down into the 497.50 area. And we are already in the 505s. So definitely going to see this move down 492, 490, somewhere in this zone, I would expect, which should give you some opportunity if you're trying to get in at cheaper prices. Again, you can be selling the call side if you think there's going to be more follow through here. And then out to 11 days, already down to the 490s. So that's going to give you some opportunity down into the 485s, as we've already sold off almost $5 here pre-market. So definitely keep an eye on that. Definitely going to give some opportunity. And the question is, will there be follow through on this move? Something to pay attention to. Definitely not suggesting that you jump into these with 2 feet. Want to see how they play out in the pre-market. Might even get a better opportunity if you're trying to get in on the put side. Otherwise, if you think it's going to sell off with follow through, just stay on the call side. The at the money calls, like I said, right in that $6 range, getting a little bit more than 1% over the next 3 days. So definitely a lot of volatility. And again, end of April for their earnings. And then lastly here for Apple, there was not a lot of volatility on Apple. You can see expected move was down into the 169-ish range between those two strikes. You can see they don't even have strikes every dollar here on Apple, which is interesting. We're right in that 168, 169 zone. And you can see we are down about $1 pre-market. So expect that to move to the 168 strike. And then you can probably get around $1 or so at that strike. Depending on how it opens in the market, we could see the IV rank go up. It was already pretty high at 45, definitely some opportunity there. But again, if that Apple structure breaks, this could be moving into the 145s. So if you're a bit of a gambler, could be buying those for about 5 cents. I don't know if it's going to happen this week, but even if you were to go a little bit further out, they're only 10 to 15 cents for some opportunity in that zone. Again, who knows the time frame, and if that structure breaks, I would expect it to move into that zone. And then I do think there's some opportunity in Apple at that price. And then you can see earnings here May 2nd for Apple. Let me know down in the comment section what you think of this lawsuit. How long is it going to take to happen? And will these markets see bigger sell-offs catalyzed by this lawsuit? Will there be follow through? Let me know. Otherwise, like and subscribe if you got any value out of this video, and make sure you hit the bell so you don't miss out on any future episodes. Of course, none of this is financial advice. This is all for entertainment purposes. Good luck in your trading and have a great day.